Looking at the Mid-America, how did it close out 2013?
Our survey of supply managers in 9 states, the Mid-America region, it ended on a positive note, although the index is still pointing to soft growth for the first half of 2014. But it was a reasonably good report. The overall reading is above growth neutral for the second month in a row. We ended the year with inflationary pressures down dramatically from the beginning of the year, 2013. Of course, we're going to move into 2014. Supply managers are not that confident about inflationary pressures. In fact, about 1/3 of them indicated their chief concern for the economy going forward is the increasing cost for the inputs and supplies that they purchase. So there were some, I won't call them negatives, but it certainly does give you a little trouble, or at least indicate that there may be some hurdles to move across in the year ahead.
What about employment for the month?
Employment was down below growth neutral, but it's a tale of two industries. That would be non-durable goods, where we're really seeing some softness, and that would be, for example, on ethanol, anything connected to agriculture in terms of the non-durables. Ag is going through a tougher time right now with crop prices. And that's crop prices down by 35% over the last year, and that's being telegraphed back to the businesses that we survey each month. And these of course are businesses in the state stretching from North Dakota and Minnesota and north to Oklahoma and Arkansas in the south. So on the durable side, a little bit better there because of exports. And of course, even for those businesses with heavy ties to agriculture, looking outside the U.S., agriculture is strong. A company like John Deere, for example, while their business in the U.S. may be down, their business globally is looking much better. So there we're seeing some of the much more positive on the durable side. Now on the business services, there we saw some pretty good growth. Now business services being companies that are providing accounting services, engineering services, legal services to businesses that we're surveying. There we saw some strength as well.
What else about the economy? Is the impact of the Federal Reserve's announcement evident?
We're seeing it, Cindy, moving ahead, and oddly, again, the supply managers are concerned about price increases, and they're concerned about the stimulus that we're already seeing. In other words, the Federal Reserve has indicated that they are going to taper, or at least cut back on the stimulus. I expect that cutback to get even more aggressive, if we can call it that, in 2014, meaning the $85 billion monthly bond buying program will be cut to 75, to 65, to 55, and so on. I expect by the end of the year the bond buying program by the Federal Reserve will end, simply because of the improving U.S. economy and what we're seeing on I think we'll see inflation increase, inflationary pressures, I should say.
What else about the survey?
New export orders were pretty good for the month, and of course that's despite the stronger dollar, which makes U.S. goods less competitively priced abroad. We had a business confidence number that was up pretty strongly for the month. And of course, a lot of that can be traced, I think, to the budget deal that we saw. The Congress, of course, the Senate and the House moved together for a change, approving a budget deal for a couple of years ahead, and that ended up really improving business confidence among the supply managers that we survey. Also, I think we're looking at other hurdles that they expect in the year, the concerns that supply managers expressed in the December survey. 20% thought the #1 hurdle for 2014 was going to be the Affordable Care Act. Of course, there's some real issues in terms of cost of Affordable Care Act, also coverage issues in terms of the Affordable Care Act, and some of the cost of implementing it in terms of the companies, what that's going to mean for those companies. There are real concerns there as well.
Looking ahead to 2014, what do you expect?
For 2014, the gap between the growth in the U.S. and Mid-America is going to close. In other words, we had the Mid-America growth up here, the U.S. growth down here. Now the U.S. growth is going to improve while the Mid-America growth is going to come down a bit. So that gap is going to close, and a lot of that can be traced to a farm sector, an agricultural sector that's just not doing as well. Again, that we're talking about crops there, not on the livestock side. Looking at energy still remains very strong, whether it's in North Dakota or whether it's Oklahoma. Those two states looking ahead pretty strong. We're going to see automobile production. That's going to continue to be a real positive factor. And that's going to be good for a state like Missouri, where we really had a lot of workers in Missouri that were discouraged and move out of the labor market. They're going to come back into the labor market. That's going to be good for Missouri. We're going to see unemployment rates across the region move a bit lower, although they're much lower in every state in the U.S.